Welcome back to Trader UK, Adam here. Today I want to share with you what is quite possibly my favourite stock of the moment. Certainly one of my best performing stocks within the portfolio. The company I'm going to share with you on screen in a second is called Novonix. I've mentioned them one time previously on the channel, but we've never really taken a detailed look at this one. So I'm actually happy to go out on a limb at this point and say that this little Australian-based company could end up being, or I think will end up being, one of the most important companies within the North American EV supply chains. I've seen suggestions to say that it could hit $100 by 2030. So today, that's what I want to do. I want to take a look and see what this company does. Really, it's split into two different sections, so make sure you stick with me for both, because it's actually the latter section that's driving the value and driving the growth in this one. And that's what we're going to do today. So let me switch across to the laptop and let's take a good look at this one. Now, given this stock is under $4 at the moment, with a market cap somewhere around 1.8 billion, a $100 price tag would value this company somewhere between 40 and 50 billion US dollars. So moving away from what is a small cap company to a pretty substantial large cap company in a short period of time. So let's take a look at why investors are predicting that rise. This here is the company, Novonix. This is their website. They're a battery technology company, a battery materials company. Like I said, headquartered in Australia, Brisbane it is, but they have a good presence in North America as well. They essentially, their aim is to make batteries better and battery materials better, with a focus on EVs and grid energy storage, which obviously we know are set to explode or already exploding and will continue to do so across the next decade. As per their website, they kind of split the company out into different sections. They have rapid battery development. Here we are, rapid battery development solutions, which includes performance testing, prototyping, development, demonstration, and equipment sales. This is the first part of the company, and that's where the bulk of the revenue comes from at the moment. But just bear in mind, turnover's about 5.2 million Australian dollars at the moment. So it's tiny in terms of revenue. And of course, that kind of revenue isn't, demonstrating or justifying a 1.8 billion US dollar market cap. This here is the annual report, the most recent annual report for Novonix. And you can see one revenue generator for the first part of the company, the battery development part of the company, comes from equipment. They sell equipment. It's equipment or hardware sales here. They make equipment that can be used to test batteries and battery materials, and they sell that to battery developers, battery manufacturers, and those involved in the supply chain. Now, equipment sales were actually down from 2.1 million Australian dollars, so tiny, to 1.4 million Australian dollars in 2021. So again, not the best sign and not what you expect for a company that's been on, or a stock that's been on the run it has been. But yeah, tiny in terms of numbers. They also make money from consulting. Okay, and the consulting, on the other hand, was up about 70% in the same period. So from 2.1 million Australian dollars to 3.8 million Australian dollars in 2021. So like I say, about a 70% increase in the same period, but these are not numbers, still not numbers, despite the increase that justify a 1.8 billion US dollar valuation. But clearly not the part of the company that is driving the growth. But having said that, this is an important part of the company. This is something that will drive growth and innovation in the future. Novonix Battery Development Solutions, this part of the company, is who existing battery manufacturers and specialists come to, who they turn to within the supply chain in order to test and in order to innovate and to develop new materials and products. They consult with Novonix on that basis, and they draw on their knowledge and their expertise. So they're a very valuable part of that supply chain already. So over the next couple of decades, most likely, as we sort of really shift away from the combustion engine and towards EVs and towards more battery storage as well, grid storage, and we see the products and all the materials developing and getting better and improving. It's very likely that Novonix, given their position within the current supply chain, are responsible or could be responsible for those innovations or play a part in them. So although this isn't, again, a big revenue generator, I think this is an important part of the company and one that will support that future growth as they develop new materials, new products moving forward. And if we actually go and look on the home page, you can see their battery technology IP pipeline. And they mention in here, if you have a look at this, in here they sort of mention that they have existing R&D partnerships already. They have developed a proprietary manufacturing process to eliminate waste and significantly lower the cost of cathode production. So again, that cathode production will no doubt end up being a third segment of the business, and again one that will end up driving revenue and growth. And then you can also see in here that Novonix has filed patent applications for materials and processes in advanced anodes, cathodes, and electrolytes. So yeah, they have a lot going on. They have a lot of development, a lot of innovation, but you just can see from their IP pipeline that this part of the business is gonna drive growth in the future. And from an R&D standpoint, it's an exciting company to be involved with. Now, before I jump into the second part of the company, the part of the company that is really driving the growth, if you can do me a really big favor, and if you can like this video for me, of course, subscribe as well. It's always very much appreciated, and it really, really helps out with the YouTube algorithm as well. So thank you in advance for that. And then the second part of the company is here. This is the more, I would say, more exciting part, the part that is causing all the hype. This is Anode Materials. And again, what's causing the excitement? This is why people are suggesting it could hit $100 by 2030. And it's probably what will continue to drive the stock price upwards, in my opinion. Pure Graphite is actually the name of the subsidiary. You can go and look them up, but it all falls under the Novonix umbrella. But they have a subsidiary called Pure Graphite. They produce a synthetic graphite, and it's used in lithium-ion batteries. They are going to produce this material in the US, so they are Australian based at the moment, but they have facilities, and like I said, they have a footprint in North America, a couple of factories in the US, and they're going to produce it for the North American market, for that supply chain. We know how important it is to Biden to create a domestic supply chain, certainly for battery and energy and the EV market as well. From what I can make out at the moment, they are the only producer of this synthetic graphite in the US. Certainly who produce at any scale anyway, because there'll be smaller, handful of smaller suppliers, but you need scale for this. They also receive funding from the US Department of Energy for over $5 million to help them ramp up their production facilities at one of their factories. I think it's in Tennessee, their factory, but they got that grant from the US Department of Energy. They were actually the only company in this field, anyway, to get that funding. So it does look like there's a little bit of reliance there, potentially, on Novonix to form part of that future supply chain. And obviously that positioning with the US won't just position them well for the US market, but the North American market or the Americas in general. Now, graphite in general is a material that gets used in lithium-ion batteries, and according to a figure from 2018, in 2018, it was a 50-50 split. So 50% of the graphite used was synthetic graphite and 50% was natural graphite. But what is known is that the vast majority of graphite is extracted in China or produced in China and Asia in general. But China is definitely the biggest producer. But it's very common for a lithium-ion battery to contain 20 to 30 times as much graphite as it does lithium. The Tesla Model S, I think it is, contains 95 kilograms of graphite. So it's a material that's in very, very high demand. And if we're expecting an impending lithium shortage, which everyone is talking about, which is driving up the price of lithium, then graphite is probably going to be even harder to come by. In fact, China is already restricting, or has been restricting, exports of synthetic graphite, or graphite in general, I think it was. Now, what Novonix are producing is the synthetic type, synthetic graphite, which is obviously the man-made version. So it's potentially greener and a cleaner material, better for companies chasing ESG commitments, and probably better for your higher end batteries because it's got higher purity as well. So better in your more expensive batteries and your better performing batteries. It's certainly more expensive at the moment, though, than natural graphite, which is why it lends itself better to the higher end market. Synthetic graphite currently sells for anywhere between 12,000 and 20,000 per ton. Okay, and let me just have a little look here. It says 20,000 on average here, but I've seen mixed reports on it, and they range between 12,000 and 20,000 per ton. Whereas natural graphite tends to sell between $8,000 and $11,000 US dollars. This is per ton. So it's a more expensive material. It's better performing, better for ESG purposes, but you know, according to the 2018 study, was already making up 50% of demand. Now, under more normal circumstances, I would expect that over time, as production of synthetic graphite kind of ramps up, you would think that the cost of synthetic graphite would come down and it would become more competitive with natural graphite, which, like I said, sells between 8,000 and 11,000 per ton. That's for battery grade graphite, okay? But, you know, if it's 12,000 versus 11,000 at the moment at the lower end versus the higher end, it's not that huge, the difference. I think, given the shortfall that we're already seeing, the shortfall we already have, and given the importance of ESG commitments in terms of accessing certain markets, Europe, for example, are going to be very strict on that, being able to sell EVs into the European market. I think it's actually more likely that rather than the cost of synthetic graphite coming down, tumbling down substantially, I actually think it's likely that we'll see that price stabilize where it is between 12,000 and 20,000, or potentially even get some upward pressure, as the cost of natural graphite will probably trend upwards as demand ticks up and increases. We're seeing it with other commodities, other raw materials. So I would expect the same for that, and probably we'll see a stabilization of synthetic graphite prices. But, you know, that's not too important at this stage, because we're going to have a little look at the numbers in a second. So Novonix, they have a good material, they have a good product in synthetic graphite, and I suspect there would be lots of demand. But the question really for Novonix is, how close to commercialization are they? How close to significant revenue? Because $5 million a year, again, doesn't justify a $1.8 billion market cap. So how close are we to that significant revenue? There's tons of these companies at the moment out there who have so much potential, but they're just not delivering, or they're actually quite a long way from delivering at scale anyway. Gevo is a good example. I love Gevo. I love their product, but I still think they're some way off delivering substantial revenue. Lake Resources, another company that I invest in the EV supply chain. QuantumScape, probably a good one. There's loads of examples of these companies out there at the moment. So how close are Novonix? And according to the most recent annual reports, Novonix plan to produce 10,000 tons of this material by 2023. So assuming that they don't have You can see that here if I just highlight for you this paragraph. Assuming they don't have any issue finding buyers, offtake partners, then at the low end of current valuations for synthetic graphite, that would boost revenue in 2023, and it's supposed to be early 2023, by 120 million at the low end, and then at the high end, up to 200 million US dollars each year. So significant boost to revenues from a $5 million revenue company, Australian dollars, to, you know, hundreds of $1 million by 2023. We're starting to see that ramp up almost immediately. By 2025, the target is 40,000 tons, which is, based on current valuations, 240 million US dollars in revenue at the low end, and could be up to $800 million a year at the high end of revenue. And then by 2030, they are estimating 150,000 tons, or they're planning to ramp up to 150,000 tons, which is where we start getting to the big numbers. And that's going to be between, you know, again, based on current valuations, $1.8 billion and $3 billion a year on the top line to revenue, based on those valuations. So it's starting to get to significant revenue quickly from early 2023. We're approaching 2022 already. Now, the cost of producing the synthetic graphite isn't that clear, but obviously it's important to know. There's a bit more information available for natural graphite. A ton of battery grade natural graphite would usually cost $3,000 to $5,000 to produce, and sells for $8,000 to $11,000. So they say a gross margin of 60–70% on that. So it's a high margin product. I probably wouldn't expect synthetic graphite to achieve the same high margin as that. Not just yet anyway, because it needs to be ramped up. It needs to be scaled up. But by 2030, you have to assume that they are aiming to be close to that kind of margin. Even though if we assume a worse margin, if we take a 50% margin by 2030, then that would indicate earnings or gross earnings between 900 million US dollars and 1.5 billion US dollars. If you then base a simple valuation on the fact that the forward P of the S&P 500 is currently 34.25 at the moment, which is a bit rich, of course. But, you know, Novonix is an innovative company at the heart of the supply chain, in the right position. A company that will probably be at the helm of any advances in battery technology and battery materials. So there's probably an argument that, you know, 34 for a forward P, that's the kind of valuation you should be looking at. But for the purposes of myself playing it safe, valuing a company a long way out where there are lots of variables, even if you assume a forward P of 25 on this one, and again, I'd rather be, I appreciate there's arguments for and against, but I'd rather be a little bit cautious. A PE of 25 would value the company somewhere between $22.5 billion and $37.5 billion US dollars by 2030 again. And that would put the share price somewhere between $48 and $80. So for me, it's probably, maybe I'm playing it a bit too safe there. For me, it's probably a little bit shy of the $100 mark based on that. Of course, there are lots of factors that are not being taken into account there. Lots of things that we haven't accounted for. Something that might drive the stock price higher than that is the fact that we haven't taken into account the other parts of the business. We haven't taken into account the battery development side that's currently generating the revenue on this one. Again, it's small at the moment, but by 2030, could they have grown that out into significant numbers? Quite possibly. It also doesn't take into account the cathode materials side of the business, which they have in the pipeline. So there are other factors that could cause the share price to be a lot higher. The valuation, the PE could be, we could use 30 as a PE. So the price of synthetic graphite could get a lot of upward pressure and we could see it skyrocket. We know what's happened to other raw materials. So lots of things that could cause this to be higher. There are also factors that could cause it to be lower that we haven't taken into account. For example, we haven't taken into account the other expenses that there could be. So we haven't taken into account financing costs. We haven't taken into account other operating costs that they might have. So other downside factors, I would certainly say on this one, we could see that the price of synthetic graphite doesn't move upwards. We could see that they have problems rolling out that 150,000 ton target and they don't achieve it. So lots of things there that could move it either way. But just as a very vague way of valuing the company, I think that gives you some idea of where they're heading. Now, the other thing that hasn't been accounted for, which I think is really important, is dilution of shares. So in order to ramp up, most likely they're going to sell more shares at some point. That's probably going to happen. Now, there is a really good channel, actually, that you can go and check out called The Stock Factory. They do a really good detailed analysis and they try to take into account share dilutions and pretty much all the variables that there are. For me, I would say that, that type of, I think their analysis is brilliant and I really enjoyed it. But for me, I prefer to take a more simple approach when valuing this company because there are so many moving parts on it. I think it's a company on the right side of change. I think they have a product that is in high demand on this one and a product that will have pricing power, certainly amongst the higher end battery producers and manufacturers. It's a company that will continue to innovate and because of their position within the supply chain, most likely drive battery technology forward. Do I think this company hits $100 by 2030? That's a big jump to make from a $4 stock, under $4 stock that's been on a good run recently to $100 by 2030. It's a massive jump to make, but at the same time, I wouldn't like to rule it out. Based on the numbers that we've been going through, that's the kind of trajectory that they're on. If they can stick to the schedule for the ramp up and the demand for the material increases in the way that I think it will increase, if the EV take up is going to be as quick as it looks like it is, then there's certainly a possibility, but there's also a lot of things that can go wrong. We know that ramp up won't be easy, so we'll have to see how that goes. In the shorter term, though, this is a company who are seeking a listing on the NASDAQ. They filed papers with the SEC, so that could be a big catalyst for them as well. And again, they should be recognizing substantial income by early 2023 as well, which isn't far away. So as soon as they start recognizing that revenue, that's going to be a big catalyst as well. I have been doubling down on this one. I like it. I buy it on the Frankfurt exchange, so I like it around the €3 mark at the moment. But anytime it has a sort of red day, which is quite rare for this one, I tend to be adding to it. So if you are holding Novonix and you know a little bit about this company, I would be interested to hear your thoughts down in the comments. Let me know. Also, give me your price prediction for 2030. Where do you think this stock price is heading? Do you think $100 is unachievable? Where do you think it will get to? That is everything for today. Thank you as always for watching and I'll see you next time.